Okay, so first and foremost, a lot to discuss. I'm going to talk about the switch from YouTube to Vimeo quickly. I'm going to also talk about some of my notes from things that have transpired in the last couple of days, particularly with Janet Yellen and her stunning revelations about not understanding inflation, which to me is, I've always known this, I've always suspected this, but they actually admitted it. Pretty stunning. I'm going to talk a little bit about North Korea. We're going to talk a little bit about the president's tax plan, the implications to the market, and we will discuss a little bit about the some of the stocks and the major market indices. So first and foremost, as I had mentioned, I had forgot to hit the record button. So for some of you, this is going to be repeating, but it won't take very long. YouTube decided to end paid content, and I am forced to switch to Vimeo. That's really not as big a deal as it may sound. I'll show you. I'm pulling up on the screen. If you're watching this, you're probably a paying subscriber anyway. So all you have to do is go to my my paid subscription site. That's the Justin Pulitzer Trades. This obviously is a logged out version, but on yours it'll have say subscribe. Just hit the unsubscribe, and then you'll go to my Vimeo page and resubscribe there. Same pricing, all of that good stuff. Anyhow, that's the scoop with that. As far as the quality of the page, I think Vimeo is actually better. I can have both the subscription service, the paid monthly, and the a la carte all on the same page. I don't have to do two pages with separate updates and have to answer questions back and forth. It could all be on one page, consolidated in one place, and that is going to make things a lot faster. As far as getting the uploads up quicker on Saturdays or Sundays, whenever we wind up getting them up, it'll have a. I'm not going to have to worry about the currency issues. I have to go. Believe it or not, when I upload them, I have to go through and do the currencies for all 38 countries every time, particularly for the a la carte one. And I think people are going to be very happy with the switch. So if you're not switched yet, please get that done. Here's the caveat. A lot of people have billing cycles that already started, and there's a bit of an overlap, and they don't want to pay twice, right? If you want to, by the way, I'd be more than happy to take it twice, but I don't really expect that of people. So what I'm doing is having a grace period. I just announced this past week, so if you're currently on the YouTube station and you're paying a monthly fee and you just re-upped, you'll be good through your billing cycle. I'm going to stop doing new content uploads to YouTube as of November 1st. That is, November 1st will be the first day of only Vimeo, no more YouTube. Once in a while I may do these, and I'll still keep my YouTube channel active, and I'll do like these the live stuff once in a while. But as far as the paid content goes, with the weekend review video, the midweek videos and such, that will all be moved to Vimeo. So it's not optional. It is unfortunately mandatory, as dictated by YouTube. So like I said, I'm giving the grace period. It should be more than enough time. Just check when you're. Can you do Q&A through Vimeo? Not that I'm aware of. So what I think I'll start doing is I'll either take questions ahead of time, or maybe I'll do like this, and then I'll have the chart version on Vimeo. I haven't figured out how we're going to handle that just yet, but I'll keep everybody updated. So that's the scoop with that. I don't want to spend too much time on that. In the charts version, I just showed how to do it on the page, and just check what your billing cycle is, and make sure before it re-ups that you unsubscribe from the YouTube and get into the Vimeo. All right, so in a moment of amazing candor, Janet Yellen is going to basically has admitted that, and I'm calling it inflation gate, that they can't understand why there is no inflation, quote unquote. Now, for any of us, these are my glare protecting glasses. I'm starting to get some glare off the screen in the sun. for all of us, we know there is some inflation, and we know where it is. It's in housing, rents are very high, and it's in healthcare. And that's where people are putting their money, and they're not spending necessarily on other things. We also know technology, artificial intelligence, AI, just the way our society functions has changed. The movies, for instance. To go to a movie for two people and to get some refreshments and tickets, I don't know what this is like around the rest of the country, but here in New York, you're lucky if it's under $50. Now, it costs $9.99, I think, for Netflix for a month, right? So people aren't paying. They're just not re-upping. I know, first of all, the movie content is terrible that's out lately. It's all made for like foreign markets. It's just sequels of sequels, and it's just remakes. It's all garbage, in my opinion. There's also a bit of a component with boycotts that are happening for for political reasons and so on and so forth. But I don't want to get too much into that. But like, for example, I was talking to my cousin last night. We were out to dinner and we were talking about seeing a movie. And I said to him, why don't we just wait 3 weeks? It'll be on demand. We can watch it on, cable for $6 rather than go and, spend, in the teens for tickets and eat all this unhealthy popcorn and so on and so forth. So that's a societal change. Wireless, Yellen has talked about wireless being one of the causes, but she dances around it and never really fully gets to what the main cause is. And I know a lot of people are not going to like this, but it's true. The reason is Obamacare. That is the core reason for not having wage increases or average hourly hours worked and average hourly wages both increase. Companies are cutting short. The average has stayed exactly at 34 hours a week. It's never really, it's just like plastered. It's like pinned to that level. And you have like these little minor upticks in terms of pricing. The issue is companies are circumventing the tax, and they're either offshoring or they're hiring people part-time, which is a big deal. So she never acknowledges that, and that to me is one of the big reasons. If you have less disposable income because your rent is through the roof and you're paying, an arm and a leg from healthcare, I mean, I'll tell you, coming into Obamacare, my healthcare premiums had gone up 17% year over year for like 3 or 4 years in a row. And then after Obamacare, it was up like 30 or 40%. I mean, when you factor in the deductible going up, the having more co-pays, like, for primary cares, for drugs, it's all going up, and people have to pay that. So, and if you don't have a job and you're not paying more, you're not making enough money to spend, to go out. Food has also gone up too, by the way. To go out in New York City is like crazy expensive. It used to be you could get pastas for like $15, $16. Now they're like 24. I mean, it's like a real entree now. So, these are things that the Fed doesn't understand. I would love to ask Janet Yellen how much a gallon of gasoline costs, or how much a carton of milk costs, or just, an average question that, and it would be amazingly candid. I guarantee you she wouldn't know the answer to a lot of these questions. These ivory tower folk. So that's a big issue. Interestingly, ties into a comment that President Trump made today. He was asked about the repeal and replace of Obamacare, and it's now going to be pushed into 2018. Apparently, the window is closing, and they're going to try and do it in 2018. In the meantime, he announced something that I don't think got very much coverage today. People were talking about the taxes, but this is a big deal. He's going to issue an executive order next week, and that's going to take down the state lines. A lot of people don't know this, but health insurance companies have monopoly exemption, and that apparently is going away, and they're going to take down the state lines to open up competition. So healthcare prices, honestly, my opinion of this is that they should just repeal Obamacare, no replace, take down the state lines and get rid of the monopoly exemption. Healthcare prices would crash, absolutely crater. In a lot of these markets, they have regulations and that they can only have a certain number of providers. Now it's going to be open, and that will make a huge difference in terms of cost. So that's a big bonus and a big shot in the arm for the economy. What else? North Korea. Listen, the guy is a maniac. Either he's a maniac or he's bluffing. You don't make statements that you're going to shoot down bombers and lose the element of surprise. They're going to have heavier fighter escorts. It just seems very unlikely to me. It seems like a lot of talk and a lot of bluster. Of course, the alternative is really truly unthinkable, but there is room for miscalculation. I've noticed, and I've mentioned this in the last few videos, the market is getting, once the market experiences something, and again, the reaction, first of all, the amplitude, meaning in this case it would be down, has been getting less and less each time, if you've noticed, and the time period for the recovery is getting shorter. So I think that what this has done, and this is where this all gets important in technicals, where it ties into the market, is that these liquidation breaks on headlines actually strengthen the market, because a lot of people have stop loss orders in. They get triggered, they get run, and then you get people who chase it short, but usually on the lows. So you wash out the weak hands, sort of the last to buy type of longs. You suck in the shorts, and then that's why you get the squeezes up. That's what you've really seen. And the big example of that was the one that I was talking when I was talking about this in the video the other week, was in the SPY, right? When you had this big gap up from 8.9 up here, and it just wouldn't come down, right? It was very stubborn. This is all people who are short. This isn't like new money buying here up here. These are people who are wrong. I mean, of course, there's a few new money buyers in here, but like, look at this. This was like open low, rallied up, open low, rallied up, open low, rallied up. Here you had a gap down, rallied up, and then a gap the next day. So all of this is all short covering, and it's been very stubborn with price. Here you got a bit of a liquidation break here, but look where you stopped. I mean, you really stopped right at the breakout and on the 20 MA. You came up here, a bit of a sell-off, and then today kind of opened at the progression line in the SPY, sold off here to retest the channel low, and then kind of closed up fairly strong. And you did make a new all-time high today at the, in the S&P. I mean, it's very hard to say you're in a bear market when you're making all-time highs in the market. So my take of that is, as long as the SPY, let me zoom in here, a little zoom. As long as the S&P, let me remove that, can kind of hang out above the 20 MA, because we now see that that's the support, and today got close, it's kind of okay. I mean, I would maybe get, like today you have a bit of listen, this is theoretically a bearish pattern at the top of a range. You've had a lot of these dragonfly dojis, but they don't really resolve much. I mean, you get a bit of a liquidation break, and you had a little bit of one into the close after some poor highs. But just theoretically speaking, if tomorrow is a gap up and you get over today's high, I mean, this could really start running. I mean, anyone who kind of got short in here is pretty screwed. I mean, to be quite frank, and I'm sure there's still a lot of them who are caught in this. I can't even tell you how many people have messaged me, all gaps must fill, it's coming down. I think they added here. And I said I was targeting range low. Remember when we talked about where this could go on a liquidation break? I said the first stop would be range low, and then we'd see a lot of people, and I'm going to talk about this in Amazon, we're going to talk about this again and again in stocks, and it has to do with waiting for it to happen and not anticipating for it to happen. I think a lot of people got short in the lows here, just assuming that the gap fill was going to happen, and then they were wrong, right? The next day they were wrong, and then today they were really wrong. So that to me was interesting. One of the short covering theses to me was this. If you go into the, this is my grid, by the way. I'm going to, again, extend that to new subscribers, by the way. If you subscribe to my subscription service, the monthly, you'll get a copy of my grid here. I'm not looking to sell it or make really any money off of it. This was, it just makes it easier so you can understand what I'm talking about when we discuss. This is, the S&P. I have the NASDAQ in here. This is the breadth of the market, which we're going to talk about in a moment. This number in particular I found very interesting. The advanced decline line, the ticks, that was also something that I had mentioned this morning. In particular, I'm going to walk you through that quickly here. The NASDAQ ticks, and then the VIX, of course. So first and foremost, you had overnight inventory, and we're going to just talk about the mechanics of what happened today. you had overnight inventory here that was mostly long, right? And they squeezed it into the open, and then you had a liquidation break for a rebalance of this inventory right at the open. You held some critical levels here. This was a look below and fail of the value area, which is just where 70% of the prior day's trade had been. This is the value area low, the point of control, which is the point at which the most price took place. And then the value area high, you had the look below and fail, a move up here, a pullback, and then we were off to the races. So how could you have seen this coming intraday? First, why was this? Why is this, in my view, only really short covering? One is that the breadth in the internals, and this was even before the liquidation break off the poor highs into the close, was very minor. I mean, you weren't even over 2-to-1 in the NYSE. The NASDAQ was better, of course, 3-to-1, but that isn't indicative of like an all-in stampede. I would have said that today probably would have felt a little bit more toppy. Oddly, if the internals were stronger, like full-on capitulation. But this wasn't a lot of conviction buying. This is just people who were wrong. They got short. A lot of people probably added here, it got liquidated, stopped out, and then it banged back up. The AD line was 377. That's not like 1800 or something. That's when, when you're pinned up there, that's like when you kind of like just completely, melt into the close all the way up. Now, what I was saying early was this with the ticks. Check this out. We were coming down here, right? This was 1045. The low here was 1045, confirmed. Then you're starting to make higher lows. This is the zero line, and I had said that you need to see bodies close above the zero line before taking on the longs. So at 12 at noon, and that's right here, that's when that occurred. So you're noticing here that bodies on the ticks, meaning people who are accumulating stocks, when you start seeing bodies closing below the zero line, that's distribution. When you see it closing above the zero line, that's accumulation. And we hadn't broken fully out here yet. So you're seeing they keep trying to cattail, they're trying to take it down here. And then it comes up over the value area high. Once you take out, I believe, this high, shorts tend to be a little bit more disciplined than longs. Once you took out this high of day and the value area high, this bar is high, this kind of decision bar, that's when the squeeze happened. This is where all the stops were lying above the value area high, because here, look at this. You went into value, you broke value, price was uncomfortable below value, it came right back into value, and here you tried to pop out, it couldn't get out here. It comes back down into value, and once you get out of value again, that's when shorts are like, enough is enough, and whammo, you get the squeeze up. But like I said, it always shows in the ticks first. That is the quickest of the internals to flip. Same thing on the downside. Look here. This was 1,500 hours here. This here was 1,500 hours here. Look at this. The market is still making new highs, but the tick has a body closing below zero. What does that usually lead to? Further break, liquidation break into the close. It always shows in the ticks first. Just keep that in mind. This is a big tool I just gave you. I'm going to try and talk about this stuff a little bit more often, because I tweet about this during the day. And then over here, you can see in the NASDAQ, by the way, price never accepted into value today. It looked in here and was like, nah, and just went back up. That's also after multiple days of selling. And here you had, tweezer tops. That's what caused the liquidation break. Here, down here, it just kind of looked in, rejected, it looked in, rejected. This is almost like a mini secure low here, by the way, with a low bookended by two higher lows. And once you clear the highs, look where the rip took place from, above these bars. These are easy technical patterns to spot on your own, and now I've given you some of the tools to do it. Okay, we covered that, I think, pretty well, actually. I'm going to talk about NASDAQ quickly. I'm saving IWM for last, because it's like the Vanessa Williams song, you go and save the best for last. All right. Check this out. We are still in a downtrend in the NASDAQ. Let's make that a big, bold number, lettering. I want to tell you why this is happening. For, I think a lot of people, this is going to be almost counterintuitive, and this is against what the TV people, isn't that what they call it? I just had a revelation. Anybody who knows me knows I am very anti the financial networks, and I assure you the feeling is more than mutual. I have some friends of mine I know who work there, and they have told me that I am loathed over there in TV land. So that makes my scorn of them all more fiery. The TV people were what Carol Ann called the poltergeists in the original Poltergeist. So it now all makes sense. They're the TV people. All right, so the demons, right? So check this out. Here you had the double top. I mentioned that this was considered, in my view, a poor high, which led to a liquidation break once you took out that low. It resisted a little bit, but we eventually did come down. We checked, this was an old range high, which became support, and now we're back up. This could, I guess you could construe it as a bit of a look above and fail today because it didn't close above the downtrend line, and you didn't hold the 20 MA. Look where all this resistance was. This really was support here, and then when it failed, theoretically you should check back to it and it should fail again. So this is a very important day today. If we can get above the downtrend in the coming days and re-challenge the 20 MA and retake the 20 MA, I would say that this is just like a false breakdown, and this should melt back up to the highs, which are poor, which are in need of repair. If we lose today's low, that would signal to me some more bearishness. And given the fact that we stalled up here, this is the range high, we could theoretically rotate back down to the range low, and look where that's right near, the 61.8 of the entire range. Again, I don't want to assume end ranges. There are interim ranges below. There's a 50 MA here, which could act as support. There's a 100 MA, could act as support. But since the 100 MA is so close to the last one, like I would have liked to have seen an actual touchback here of the 100 MA on 925. We didn't fully get that extension, and they rallied it a little bit prematurely. We're going to discuss that in a moment also. The implications of that, it's sort of like a slingshot. I've given this example of, I haven't done it in a while, but like let's say I take this rubber band, which I'm surprised is even here. If you pull it back like this, when you let it go, it doesn't go that far. But when you pull it back like this, ow, God, that kind of hurt. Goes pretty far and pretty fast. So think about that when you're in conditions that are oversold. When something is only like sort of half-cocked like this, with the rubber band pulled partially, the rally is less strong. When it's like, I'm not going to do it again because I hurt my finger. But when it's really extended, the violence and to the other direction becomes exponentially stronger. So just keep that in mind. Yeah, it's bullish that it didn't touch the 100 MA, but you don't have that full extension in sort of in the slingshot, and it's sort of the BB or whatever doesn't go as far. Always think about that. That's really important. Also, think about it like this: when you get range extension through 100 MA or through a 50 MA. Like here, it gets violent, right? Because you've probably had a lot of people who are stopped out. People say, oh, I'm going to use the 50 MA as a stop or the 100 MA. You get that kind of cacophony of selling, and then it gets violent back to the upside. So that's important to note as well. Now we're going to get to the creme de la creme of my analysis for the indices today. Although I think the SPY one was pretty much second to none. You're never going to get that from the TV people. Check this out. Do these patterns look very similar to you? Because they do to me. Now, you had a bit of a rounding top, this was a very, first of all, let's go back in time. I got to do a little bit of a history lesson here because this is important. Maybe we'll just do 4-day in case it doesn't work out. So check this out. This was the old high up here. This was from 624. This is back in like 2014, was it, or 15? Let's see. This was this was 16. This was back in 2015. That was that recent peak up there at 129.10. You had this very large pullback, and you formed here what looks to me like an inverse head and shoulders. You could have used this, but I used this because this is where this rally really took off from, and it's really nice and rounded up here. This is sort of like a rounding top. This rally here was $23.94. Look at this. This was like a gap and trap, professional gap and go. By the way, this is a textbook professional gap. The professional gap is the one that changes the trend. Look at this. If you drew in a trend line here, this is going to probably hurt our ability to get into too many individual stocks, but I think that this is really important stuff. Nope, I don't like drawing it from there. I want to do it from I drew it from the wrong top. I want to do it from the real high. Here we go. There we go. Because this is an island reversal, the 2-day up here. That's a big topping pattern. So if you drew it here, you could draw it like that, one line, and you could draw one like this. Yeah, that's a second line of extension. Come on. All right, so you gapped up here, you held. Then you pushed through here, got to the downtrend, and then just beasted up, right? I mean, this had trapped everyone in here who was sort of short. You almost have a tertiary trend line here as well, which I could draw in. Getting a lot of lines here. That's really the one I wanted to show you. This is the tertiary one, really captures it well. Look at this, you have multiple days down here. The gap that traps, and then you just take out multiple trend lines to the upside. So this was $23.94. If this move here, and I'm not saying that it necessarily will yet, and I will point out a couple of things. I pointed this out on the stream. One is that we are way overextended as far as the stochastics go. And up here, as the stochastics go, you had a big volume day, which is kind of capitulatory, although up here, look at how this was. The volume just built, right, day after day. And we were actually here on this, like the big push-up day, less volume than that day. So keep this in mind. The money flow breakout here took place here. You can see it started here. You got the gap, right? So, kind of similar to this, although not as steep down. We had already had a bit of a rally. And now we're beasting up. Now, I drew in a progression line from that peak back in 2015. Look at this. You could see this progression line. It stalled it here. It stalled it here, it stalled it here, it stalled it here. Here was a look above and fail, which caused this liquidation break, and today we are majorly above it. So a couple of things came to mind for me. Number one, I had mentioned in the weekend video that this area here would be an area interesting for right or right out shorts. Now I'm going to show you how did I do this. I put on a put ratio. I think it cost me like 50 cents. Someone asked me, I think it was like 49 or something, 49 or 50 cents. I can be a cheap guy sometimes, so I might have been able to finagle that for 49 cents. Just based on this, that we came up so many times. Now, someone asked me, oh, where's your stop for the short? I was never short shares. All I had was, like, I was long put, like these puts, short these puts, and then like short 2 times out of the money down here. So I assume at the entry, that trade is either going to zero or it's going to be a huge hero, because the asymmetry of what I put that on for is chump change. I mean, 50 cents in the IWM is nothing. So, I mean, if this just hangs out up here, I could roll it out. It's in October. I could roll that out further, and then maybe I'd probably have to put a little more money into it or whatever, but for me, this wasn't, and I mentioned at the time, this wasn't really so much as a short bet to me as it was for me to hedge my positions, in stocks. I had a lot of longs on, and I didn't, I was trying to think of a really great way, levered way to protect on the downside. So that I was on. Now, let's say you were short shares. I'm going to show you a way to manage your loss if you were you took this in because I know a few people did it in shares. They had messaged me about the pattern. By the way, an inverse head and shoulders here at the bottom, and that's what caused the push up. Now, is this the end of the move? Is what everyone's asking. Was this the big volume capitulation, that kind of is going to end the move. We're really extended from the range low up. The answer is we're not going to know until we know. But I can say this, that if you were to take, based on precedence of this measured move up here, theoretically, that would take us up here even higher, up to, what was the number here? 158.06. I mean, theoretically, this could just keep going, right? Like it did here. I mean, just went. I'm a little bit more cautious, though, about chasing, first initiating. First of all, if you're what would take us up here is likely shorts, in my opinion, and some major chasers. So what I want to see, if I'm looking now for the short, is you really have to see it take out more than half of today's range and then take out the low, and then I would add to my put ratios, and I'd probably now start getting a little bit more serious about it, because I could say that we're so overbought here in the money flow, we're overbought in the stochastics, and we did get some volume expansion, and this is getting really overbought here in the lower lows and higher highs department. However, if this does keep going, I drew in a few lines of Fibonacci's. First and foremost was the range here. I put in the 1.618 of that range, the 200% move, and then the 2.618 move, which is all the way up here. So those are like in the 151s. There's a confluence of fibs, and I'm going to talk about that in a minute also. This is in the 151s and the 1.618s. The two for the smaller time frame is the 156s. Then you get into the two times and the 2.618s. You see how you get a lot of confluence. Now, the other range I used for this when I did this analysis was this range, this consolidation range from here. We've been sideways in this pattern here for a long time. In IWM, it's overbought short term, but bigger picture, it's really just consolidated for the better part of basically a year. So this is theoretically here really like day one of the real breakout. Here you just kind of started to get the closes over, and this was theoretically just a big day one breakout. I am very cautious on these types of breakouts without at least some pullback and consolidation after coming up from the bottom. Like, would I be buying the high of day today at the close in IWM? No. The time for that was earlier in the day, and we'll talk about that right now. So if you take this range, though, here, from this peak here, which was a look above and fail, and you use this true range low, you could use this one, but I wanted to use the most dramatic one. That would take you up to 151s. You have the confluence of the 1.618s. The 2.6 is up at 163s. I don't want to go too much past that, and that's consistent with the 2.0. So that's theoretically how high it could go. Now you have a trend line drawn in here. It's all okay, in my opinion, unless you lose that trend. First, if you lost today's low, like tomorrow or in the next couple of days, ideally what I would like to see out of the bulls would be a couple of days of consolidation in today's range, build out the bull flag, and then go. That, to me, I think would be the safer play for longs, for new money longs. Now let's get into this on the intraday 5-minute chart. I want to show you the anatomy of what took place today and how the proper way to trade this was. So first and foremost, this was yesterday's close, and today this was the gap, right, of today's range. Let me zoom in for you. This was today's gap up. So first you want to notice the opening 15-minute range. This is a 5-minute chart, but check this out. You didn't really pull back much. You squeezed here, pulled back. Maybe I should do this in a 15. I'm in a 1-minute chart. I was going to say this is incorrect. One day, yeah, I was going to say there's something way wrong with this. Glad I caught that. All right, so this is the opening 15-minute range. Okay, so what you had here was the press up liquidation break here This was a look below and fail. Chopped around, again, came up here, but didn't take out the opening 15-minute high. Another liquidation break, chop, 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 and then came up. Now, if you're a disciplined short, or if you were somebody who was looking to get long, you probably lowered your stop down to this peak, right? You could have potentially done that. So there was a little bit of hesitation there, pressed up, and then once you got through the opening 15-minute high, it never looked back. That was the squeeze. Because that's how frankly I trade these kind of things, either long or short. Like, you use the opening 15-minute range as your rider, and if you're short, you would put your stop right above it, because this is what happens. Or you would have put your buy stop if you're looking for a long right above it, because you know this is what happens, and you know that you have a lot of people here on the daily trapped like rats in a cage, because look, you had a true gap. It's not coming down so quickly. And then once you get through there, this is all short squeeze. This isn't like new money longs, in my opinion. I mean, yeah, I'm sure there was some chasing, but this to me was this is sort of like, I often say the exhaustion gap, but I can't say that it's definitively an exhaustion gap. Although, look, we're up near, listen, I drew in channel highs a few different ways. We're very overbought short term. But like I said, we've been consolidating in this pattern for a really long time. And it wouldn't surprise me if this was just to kind of just hang out up here, chop around a little, and then regain its kind of momentum again. So I just showed you how to trade it from the long side on a true gap like today, and how to stop the short if you were a cutie pie and trying to do it up in here, and you didn't sit through that entire bloodletting today. All right, how are we doing on time? We're actually doing okay. So let's get into some of the individual stocks that you all want to talk about. Some of these stocks I'm not really as familiar with. Let me cross off what we've discussed so that we don't repeat. I think we should talk about bonds, though, quickly. I think that's important. So let's do that. That's still like a macro-y. So TLT, and it would be nice if my chart would load properly here, because I have a lot of there we go. We have a lot of drawings in with this. So we've seen this before, right? We've seen these big pullbacks sort of in the channel. However, today is an important range. Look at this. This stalled on the 20 MA and then had a true gap below all of the range here. What was this low? This was, 25.33. This is the high of day was 25.30. So it was theoretically a true gap, because it wasn't in any of this range. And it really closed weak, right? I mean, we're right below this breakout low. I've drawn in like the breakout high, the breakout low, and you can see I drew in this channel. Now, we've traded on the wrong side of the channel before, only to come back into it. So we're on the wrong side. We could easily come back into it. But I'll say this: you're now below the 100 MA and the channel, and prices, if it's below, I always say this: if you lose 20s, you see 50s. Look here, right here, you lost the 20, we saw the 50, checked back to the 20, and now have a gap below all of this. Everyone who bought the dip in here is wrong. That's not good. That's who's in pain. And if this does keep going lower, it may be drawn to the 200 MA, which is roughly around the 2009 crash peak, when it would get there, of 123.15, which is, look, down near these reference lows, right? Makes a lot of sense to me. You snap the triangle, you fill up the triangle, basically. So that's where I'd be targeting below today's low. Now, if you get above today's high tomorrow, I'd be targeting the 50 MA. So that's my right or right out trade, either long above today's high or short below today's low for a right or right out trade. Covered the TLT, the bonds. Let's talk about the GLD. Everyone wants to talk about gold. Holla. I have to tell you, I definitely amuse myself. That's all that matters, though, right? I had said that we stalled at a key juncture. 2 years. This gap fill. Now, a lot of people here were really, I had said that we could see a measured move up to 130, but I talked about booking the profitos here. Now, gold loves Fibonacci levels, particularly 61/8. And our particular 61/8 of this range is a critical one. It would be the backside test of the old down channel that it broke out from. In my view, this would be a screaming right or right out long buy. You have this channel low and the backside of a multi-year downtrend line coming into confluence with a 61/8 of a range. I love when there are multiple references to trade into. It would be even still better if the 200 MA had time to catch up. Like if this kind of just like dribbles down, that would be interesting to me as well. So that's what I'm thinking. But look at this. This is a pretty junky pattern, right? This was a big press up, probably sucked in, took out a lot of shorts, sucked in longs, and then today a true gap below all of that and below the 50, and it was like a gap and go. Kind of similar pattern in silver, although silver wasn't as weak. Actually, it was. I didn't realize it closed as weak. That's probably why I got filled, because it was like the low of the day. But this was getting close to the 50% fib and this hammer. So I wanted to kind of book a little bit of profits here. This could get down to the 61/8 though. That to me would make sense. I'd probably start selling puts at that point. But this is sort of where this came from, and I don't know. I just felt like I should cover a little bit. The dollar, let's take a look at that. That's one I've been warning about, that I said that this is due for a rally, and we're now breaking trend. Channel, today was a gap. Look at this, a gap above the 50 MA yesterday, and today confirmed higher. So I mentioned in the weekend video that it wouldn't surprise me to see this down channel here. So we could, and that's the 38.2% fib from the entire decline, right at the channel, right at the channel top, right? Right at 2487. That to me would make a lot of sense. And if you remember, 2447 to me is an important level. But this area, look where this true breakdown, this was like these reference lows and where the true breakdown took place. So up here to me would be an interesting target. That will not go over well in the land of, you know, gold and all that. So just keep that in mind. This to me would get more bearish again if we fell back below the 50 MA. You can see here, once you got, there was a few false dawns above the 50, and then when you lose it, you really lose it. I can't say that that's going to happen, but 50 MA is the must hold if you're trying a UUP long. What did I want? Oh, Bitcoin, GBTC. So this is again getting a little overvalued. It's more than their net asset values, but we are holding the 100 MA. I had been looking here for the 100 MA test. It never quite got it. It's starting to look a little bit bullish again, but I'm just telling you that this is overpriced. The value of the assets it holds is less than the value of the ETF. That to me is a bit of a problem. I've never been able to secure a borrow on this sucker, so you really can only play it from the long side. I don't know how Andrew Leff did it, but he somehow got, I guess, his account's bigger than mine, maybe, and he was able to get a broker to lend him the shares. I'm just a poor retail schmo. Well, not such a poor retail schmo, but a retail schmo nonetheless. Amazon. Okie dokie. This is one of the examples of people not getting short with good trade location. A couple of things to note. One, we were long for this, right? We talked about this push-up. It failed pretty quickly, though, and stop out, I said, was below the 50 MA. I hope people listened, held the 20, and now lost a channel low, right? I mean, this is a defined long channel. Now, everyone and their mother that I seem to follow, or who messages me or talks wherever has seen what I see, right? This is a head and shoulders pattern. They're very clear as day. What people don't tell you, what they often don't tell you, is that a head and shoulders breakdown doesn't always follow through. Just doesn't always follow through, particularly the more it's publicized. Second, because you have a lot of late to the party people who short the lows. Secondly, it never broke down. Theoretically, you could use this low as the neckline, the 927. You could even just, you could use here. You could use wherever you want. It didn't break the full range. And this was a big breakout. So, you came down many days. It just seemed a little stretched to me. So my trade that I mentioned on the stream yesterday was to play against the 2-day low here. Because look, this is a gap down, and this is theoretically a consolidation. So the more days you're down here, if it rolled over, it would, if you took out the lows, it would probably have some follow through. However, a lot of people weren't expecting it to take out the highs. And when you did, it didn't close particularly amazingly, but often there's a trend break and then a check back and then a go lower. If you want to short stocks, don't do it on the dead lows after multiple days down. You think the market is designed to confuse most of the people most of the time and to take your money, frankly. So just have good trade location and trade smartly. Or if you want to quote Fredo from The Godfather, I'm smart, Mike, I'm smart. Be smart, short it up here on the bounce, not on the dead lows. Looking for what? A couple of more points down to the 200 MA? Again, though, I will say, Amazon would have behooved itself to have had that slingshot range extension. This was the earnings gap low from 427. Yes, I keep all of that information stored. That's why my charts are cluttered, but these things are very key. The 200 MA is right there. That would have been, to my view, a screaming buy. Absolutely. Would have probably ran a ton of stops, but now we're bouncing a little prematurely in my view, although we do kind of have a bit of a look of a low and fail. I will not be very comfortable with an Amazon long until a couple of things take place. One, it goes lower. I'm talking about not just day trading now. I'm talking about like a longer term play. This to me is, the 3-card Monte. You make the quick couple of bucks. What I need to see, and very critical to me, is to negate the head and shoulders pattern. So we would need to clear $1,000. I need to see those 1,000 sellers get cleared the F out, and then I would be very constructive on for a longer term play in Amazon. It should not go that high again if it is going to be bearish. At the very, very least, if you're, playing this, it's got to be above the 965. That was the 427 earnings gap high. Very important. These are key levels, right? So that's my take on the Amazon. Just going through this in order. Let's just do Tesla. That's what I've written down. All right, I was clear on this about booking profits. I hope people listened. Two things. One, you came up from the bottom. You banged here. We were in a triangle. However, look at this. Do we go back that? We don't go back that long. Let me go longer. Should do 10 years daily for now. I drew in a channel. This is a little arbitrary, I will admit, but it kind of worked. Right here, you were a little bit above it, and this was, a bearish pattern. Came up, double topped, came down. So you came up from the low, and look where this stalled. Right, and I mentioned this to book profits in this, right at the old high and right at the channel high. It was a technical issue. You broke the triangle, you filled it up. You broke the downtrend, you filled in the triangle, and you found sellers at the reference high and the channel high. This I can't even tell you how many times I've seen this pattern. I'm not new at this. This is now technically a look above and fail, and you might even come back down to the channel low. It wouldn't surprise me to see that gap fill in. The 200 MA we know is big support in Tesla, so ideally this kind of would go slowly or maybe even overshoot and get to the true range low down here around 303. The sharper the better too, by the way, from like the all-time, from the double top high right to the range low without any bounce. That to me, I'd be selling puts, out of the money puts, probably below 265, by the way. But the 200 MA is a key level. You're right at a gap fill. So you have roughly like, look at this. You have a, you're right on the back below the downtrend line. So in my view, if you could get back up above the 2-day high now, you'd probably bounce to the 20 MA and the backside of this old uptrend. But this pattern to me looks like it needs a little bit of time to resolve. I think it's going to be very choppy for a while. That's my take. Choppy to maybe a little bit lower short term. NVIDIA. Now, who traded this like a boss? I don't want to mention any names, but you know, maybe this guy. We were talking about this, and I was very clear about how to play this. I said that we were right up against the trend. Remember when we talk about filling up triangles and to channel highs, that a gap would be, and this is, listen, this is not revisionist history. This is all documented in tweets and videos, and it's all timestamp material. So this all happened. This is not, rewriting history. I said that any gap above these highs here, or above the downtrend, would likely be a gap and go, and it was. Why? Because you're coiling up here, and the amount of times you're getting to this, the frequency, is narrowing, right? Look at how many days it took to get here, and now you've cut that almost in half, and you're not backing off really. Like, look at this. This should have theoretically really tanked the stock, and you couldn't even get through the 50 MA. And you're back up here, and you're just chopping. This was a look above and fail. I actually got long this day. I'd sold a stack of puts, and I wasn't so happy by the end of the day. Although oddly, it filled near the end of the day, so it wasn't. I never really had any pressure on me. And then the next day was this gap and go, and then the next day was up. And I tweeted in real time, make sure that you book profits on this thing north of 190. A couple of days of chop, and then there was some news, a couple more days, and now you're back down, right? So I'll keep it simple for you folks. Back up over the 10-day to me would be bullish, or closer to the 50 MA is important. As long as this stock holds the 50 MA, it's still kind of okay. If you start losing the 50, there's more problems in here than we may realize, and it may have peaked for a while, and we could see a 100 MA test down near these range lows to fill up the triangle if you were to lose the 50 MA in trend. So just keep that in mind. That's why selling at key places are important. That was NVIDIA, right? Oh, the Apple. An Apple to you. All right, let's zoom in here. I want to talk about a few important things with the Apple. All right, so we drew in a lot of trend lines. When I say we, I mean me. But this was from the big gap here, from the 210 gap, right? Look at this. Check back to the backside. It went back up. So theoretically, it's been a long time since we had that check back, and this should be support. It also coincided with a gap fill. So it overshot a little bit, and you have a channel here. Got the channel low, and now you're back up to the channel high today. So the question for me now is what, is Apple going to break out or not? Now, check this out. Remember when I talked about the Qs? I'm going to go back to that quickly. Look where we're stalled at, right at the downtrend, right at the 20 MA. So one of these is going to lead the way here. Either they're going to buy up the ETF, and that's going to take the stock through, or they're going to buy the stock, and then it's going to take the ETF through. You're getting my point. It's sort of the chicken or the egg, because Apple is the biggest component of the ETF. So if you were to get through today's high tomorrow, I think we would target the 50 MA, possibly the 20 MA. Simple. If you lose today's low of day, I think that's a right or right out short for some rollback. I don't know if you may even retest these lows, right? Very possible. So today's range is key, and I like it right or right out, either long or short. Because long above the high would be a breakout of the downtrend, and I think that would start floating up and looking to retest some of these more impressive MAs. Or if you lost today's low, and particularly if you lost the 100 MA again, could signal some more rollover. So just keep that in mind. That's very important with Apple. That's going to be very important with the overall market as well. First Solar, not one I talk about that often. Would also help if I could type the symbol in properly. All right, so this is a very nasty-ish pattern. Not a big fan. It needs to get back up over the 50 MA. Anything below there to me could roll over here to the back side of the old channel. Retest there. If you got there quickly, this is an old gap fill. Not that important, but if you got here quickly, I'd be down for a right or right out long for a bounce. But has to get either back up above the 50 and take back a lot of this sort of weakness, or could continue rolling down here, maybe to the 42s. This is an interesting stock, and I actually do have a little bit long in now at this point. This Cheesecake Factory, this crashed. This is rare to see, but this crashed from an all-time high, basically in a straight line, all the way down to lows. Now, something interesting happened on the way to the forum here for us. One, you broke the downtrend. Two, you broke the 20 MA, and you held it. But what happened on this day is important to me. You got a downgrade in Cheesecake Factory. This was a downgraded day, and what did they do? It gapped it down, and they bought the piss out of it. And then the next day, today, it had the follow-through. They bought it up again. So look where this kind of gap below and broke down from. 50 MA is going to be my very first target. I want to see how it takes it with price, because if you hold 20s, you see 50s. So this should be up a little bit more. I'll probably try to book a little bit of it there. I have to see what I can get. But I would love to see this come back up and test the 38.2 of the entire down range, which is right at where this breakdown took place from the last earnings. You went down, just chopped around here, and went lower. So I'll caveat this. If this rallies really hard into, we now have 1 gap down, 2 gap down, 3 gap downs. I don't know if we're going to get a 4th. We'll have to see. I'm curious to see how this reacts into their next earnings. I think the trade could be, maybe it's like long the stock ahead of the earnings and then maybe not be long for the earnings, depending on how much it rallies. But just draw this. I drew a trend line in here. If you start losing the 20 MA again, it's a GTFO. Get out. It's a very small risk for potentially a pretty big reward. So I'm sort of liking that. Chipotle. I often talk about look below and fail, or look above and fail, and this is a textbook case of a look below and fail. Let me see if I can draw this in properly. Don't know about that though. Yep, there we go. All right, so check this out. This is your reference low. Higher low. This, theoretically, once you took out this low, should retest this, which it did, and it looked below and didn't find new money sellers. So it's a look below and fail. Came back up. Once you cross the high of day of this bar, is a long, almost always. And this was the case. And it went right up to the 50 MA, secure high now in, and pulling back. However, this is a key level, the 20 and the 10 MA. If this can hold, I think the stock will be okay. If it fails, maybe it comes back down to test trend somewhere down by these 303s, 305s. I don't know if you're going to make a new low in this. I know a lot of people are waiting and hoping and whatever, but just keep in mind this stock is down like 200 points in pretty much a straight line. It's due for a little bit of bouncy. Problem is it's still got an expensive multiple, and their new product kind of sucks. I just tried it yesterday, that queso. It's very chalky. It's really not particularly great, and today was a trend break. So I would say you could use today's high of day. If you get over today's high of day in the 50 again, I think this will continue to squeeze up. This could be forming like one of these like rounded type of bottoms. Still yet to be determined, but it kind of held where it needed to today. So I like today's low as maybe a stop. Win. Not one I talk about that often, but worthwhile to discuss. Stock looks a little near-term overbought to me, and the money flow isn't kind of confirming. This broke a bit of a channel, and it's below trend, below the channel. This looks all right. I mean, it's just consolidating here, but I think the problem for this is it just ran a lot, and it's pulling back. I guess you could use a 20 MA here as a stop if you're long, if you were to lose the 20 MA, or a right or right out short below the 20. That would make a little sense to me. Anyway, we're about an hour in here, so I think we could cut this here. If you want to watch the video, and I highly suggest that you do, oddly enough, and I don't often say this, I usually wait for other people to say it, I think this could have been one of my best videos I've ever done because of the level of technical detail that I put into this, and I cannot believe how many viewers we have right now. Wow, holy cow. If you haven't seen this and you want to watch this with the charts, I highly suggest watching it, the paid version of this. It'll be on my Vimeo site, which is vimeo.com/on-demand/jptrades. And I'll probably put it up on YouTube either here or on the subscription channel, obviously for subscribers and for people to pay, per a la carte to watch. Couple of things to note again. Don't want to beat a dead horse with this, but it is really important. I am flipping my paid channel from YouTube to Vimeo. Let me bring this down. Yeah. So if you're a paying subscriber, you'd want to unsubscribe from there and then resubscribe on the Vimeo site. Very easy to do. It will not automatically transfer over. It has to be done actively. You have to actually do it. Check your billing cycle, very key. Make sure that you're not going to kind of get double taxed, and when your next billing cycle ends, then do the flip. Anyway, I hope you all like this video. We were clearly trending because this is some of the most viewers I think I've ever had for an actual live video, which is good. Usually we get up to this after the replay. Anyhow, have a great rest. Is there any more questions? Does anyone want to, is there anything important that you want me to catch into the weekend video from this? If you want to do that, maybe leave me some comments or send me a tweet. My Twitter handle is @JustinPulitzer. If you send that over to me, you'll get the info. Vimeo doesn't have a free trial offer, but I think they have a 5-day grace period. So like if you sign up and you want to cancel, I think you could do it within 5 days, but it's not like the YouTube with the 2 weeks free. I mean, I've been doing these videos for 3 years now. I think most people know what's up, All right, have a great rest of your weekend, and I'll see you on, I guess, Saturday or Sunday for the weekend video. Cheers.